Are you a beginning investor? Do you want to invest in the stock market but do not know how to start? Let me show you 5 ways how I invest in the stock market. And if you watch the video to the end, I'll have a bonus, okay? Okay, before starting this video, I need to do this disclaimer. I'm not a financial advisor. I'm just a normal guy like you. I just been investing for a few years and I believe I can help some people to have some idea, but never take my advice as you should buy these stocks or you should do this investment. I always follow up with a professional financial advisor, okay? So if you're watching this video, you ask me, like, Hugo, when should I start investing? You should start it right now. If you're watching this video, you want to start right now. You don't want to wait until tomorrow. Because if you're like me, I'm playing a catch-up game. I started investing late in my life. I should have started in my 20s. But no, I started late, so I'm catching up. Start right now. My first way to invest in the stock market, that's the easiest way. Call 401k. This comes from your company. If you work for a company, if you're self-employed, you do not have that. But if you work for a company, most companies will have a 401. The only thing I talk about the 401, I will only invest in 401k if it's a match. If the company match, for example, they say, I'll take 3% of your paycheck and I'll match it this 3% or 5% or 6%. If they match, take it. That's a free money. The company is giving free money so you're gonna take 3% and they're gonna give you 3% to your investment account. So that 3% that they give to you, that's totally free. And they invest and that grows. So I always take advantage of a match, no question. The only thing about the 401k that I don't like, you do not have a control. The only thing you can choose is a moderate or a risky. Sometimes they have 3 options, but you don't have control what you invest your money on. So the company has all the control. They decide the stock, they decide who they invest with, and it's all by a company. But if they give you free money, take that. Number two is the IRA. I love IRA. It's a retirement investment. You have two types of IRA, Roth and traditional. Roth has an income limitation, so check on that to see if your income fits on that, and you can invest up to $6,000 a year. The good thing about that is whenever you retire, you don't pay tax on your gain on the Roth IRA. And you probably can choose your own stocks. If you're going with a financial advisor, they're gonna give some advice on what are you looking for. They will set up your pie with like risky bonds, blue chip stocks, stuff like that. And it is really good. You know, if you invest, for example, a Roth, you invest post-tax, but whenever you retire, you don't pay any tax on your gain. In the traditional, you invest now before tax, but never when you retire, you have the, wow, I'm talking like, sorry about that. Okay, so the traditional is you paying tax before, traditionally you don't pay tax right now, but you pay tax after. The Roth, you don't pay tax right now, you pay tax right now and you don't pay later on. So depend what's your income now and what's going to be your income when you retire, and then you decide which one is the best one. My third rule to start investing is you need to learn the heck of it. You need to learn how to analyze a balance book of a company. Analyze what's the future, what's a PE, what's a future PE, what's a dividend, what's the growth in this company. You need to know the company inside out. You know, so how you learn that? You can go on YouTube and watch videos. Just remember, any person can post on YouTube. So do not 100% believe in everybody in YouTube, because some people don't have any idea what they are talking about. So make sure that you're looking for some good advisors on YouTube, not a financial advice, but just people that give advice. Make sure that they know what they're talking about. If I don't know what I'm talking about, please put a comment down here. Okay, I really appreciate that. So first, okay, let's go again. Learn by books, by going to classes. Go to your community college or university, take some classes. Watch YouTube videos. There's so many ways you can learn, but you need to learn a lot before you start investing. Don't just invest and lose money because you didn't want to do your work before. I'm a nurse. I could not start work as a nurse without going to school first. So I learn first and then I do my job. That's the same with the stocks. Number four is really important. Like, you're a beginner, so theoretically you don't know exactly what you're doing. Like, I did not know what I was doing when I started. Is do not pick stock. Don't decide that, like, you know what, I will gonna pick this and gonna work. If you start in 2020 and you pick some stock, you did good. 2020, 2021 was great. Why? Because the feds were giving free money, so everything went up. If you look the charts for the stock market from 2020 to now, like 90% of the stocks did great. So, but now it's a different story. The Fed's gonna raise the rates. They're gonna take some money out the market. So that's why the first few weeks of January we see this red market. So don't pick stock. Make sure that you analyze the company. Go back to the rule number 3. Learn about the stocks. Check the balance sheet. Warren Buffett once say, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. What that means? Don't buy a stock just because it's cheap. Don't buy stock because it's cheap, because sometimes the cheap becomes really expensive. And another thing that Warren Buffett say, if you don't think hold a stock for 10 years, don't buy even for 10 minutes. You should buy a stock for long term. That's my way to invest. I'm a long-term investor, and I only buy stocks that I believe on the company. I don't buy stock because, this is only $10. It's pretty cheap, let me buy. No, I buy the stock because, for example, NIO, really risky, but I believe that company is going to grow so much, and right now it's a fair price, and I think it's going to grow a lot. So it's one of my investments, but because I believe in the company. Keep simple. Don't try to complicate too much your picks. If you're gonna choose 5, 6, 10 stocks that you're gonna put in your portfolio, make it simple. Okay? Don't complicate. Diversify. Most important of all. You don't want to put it all in tech stocks. I don't want to have a portfolio with 10 tech stocks or 10 risky stocks or 10 of whatever type of segment you want to follow. Diversify. Like, for example, I have Pfizer, I have AbbVie. Those are pharmaceuticals. I have Coca-Cola. I have NIO and Tesla. And I have Nvidia. So I do diversify on my portfolio. On my personal one, I even have other stocks. I have ETFs and all that. It is really important to diversify when you're choosing stock. And be consistent. If you're gonna invest like $50 a week, invest $50 a week. Like, I start my YouTube portfolio and I'm investing $100 a week. And every week I put on my M1 Finance account, I put $100, and I want to see in 52 weeks what's gonna be the gain. I started this portfolio to kind of like interact with you guys and see, because not everybody can invest like $20,000 every month or $5,000 every month, but a lot of people, not all of us, can invest $100. If you only have $10 a week, invest $10 a week. Start investing. That's the most important. The more you invest early and consistently, the more gains The more time your money has to work, and the more gains you're gonna have when you retire. Remember, the time is the best friend of the market. If you have a time to invest, wow, like Warren Buffett bought Coca-Cola 50, 60, 70 years ago, whatever it was. Now he makes so much in dividends from Coca-Cola because he bought so cheap and he bought consistently. He kept buying Coca-Cola. He loved the company, right? Number 5, and the most important rule, in my opinion, is have a gut. It is scary, especially, I don't know if it's just me, but I have such a bad Murphy Law type thing that every time I invest in something, at first that stock plummets. And I'm like, what the heck? That stock was doing decent. I'm not telling that I'm buying on the tip of the iceberg. No, I buy stock that's steady going up, and as soon as I buy, they go like a few percent down, and I'm like, oh crap. But I do not sell. Why? Because I believe in the company. So if you believe in a company, you keep that investment there, and over time it will grow. And for example, 2008, 2009, stock crashed really bad. Stocks came down, and a lot of people lost a lot of money. Why? Because a lot of people sold because they were scared. And because they were scared, they sold, that money is gone. People that left the money there, like I did, I didn't touch my stocks at that time. I didn't touch any investment. I just left there, and now I'm back. It took a while. It took like a good 7 years, I believe. 7 years to be back, but I didn't lose the money. If I had sold that time, I would have not the gain that I got from 2008, 2009 to 2021, 2022. Wow, I'm still last year. Okay, now the bonus. The bonus goes for you right there. That's for you. Do not invest more than you can lose. The stock market is a beast, and if you invest money that you're okay to lose, like you don't want to lose, you don't like to lose, but you're okay if you lose. If that company you bought go bankrupt, it will not cause too much distress to your life. So if you're okay to lose, you'll be more willing to hold if that stock goes down. If you're scared, you only have like $100 and invest, but you cannot lose that $100, and that stock goes to 80, you'll be scared. You're gonna have a fear, and you're gonna sell because you don't want to lose more. But if it's a good company, you did your diligence of understand the company and believe in the company, that company probably in 2 years, 3 years, is gonna be 110, 120. So have a gut to hold to your beliefs. Again, don't buy a stock because it's cheap. Buy a stock because you believe it. And one more quote from the GOAT, Warren Buffett. Successful investment takes time, discipline, and patience. No matter how great the talent or effort, sometimes just take time. Do you have a chance to buy a stock and gain so much in 1 day, in 2 days, in a week? Yes, but that's gambling. That's not invest. Invest take time. So before invest, make sure you work with your gut. Understand that you'll be for years. Like I'm a long time investor, so like something that I bought 5 years ago, I still have it. Most of the things. Do I sell some stock? Yes, I'll sell if the fundamentals of the company change, or if I want to use that money to invest something better. But if not, I'm hold until I retire. My Pfizer's, my Coca-Cola, I have no desire to sell. Plus, give me dividends. So, but these are my 5-6 rules that I invest. If you think this has any value, do you think this kind of help you? Please subscribe, smash the like button, put a comments, let me know. This is my 11th video, and I'm trying to work so much better, and and every video I watch and I take notes, and this I should change, this I should not change, and I hope I'm improving every video. Okay, thank you so much. You guys have a great day and go invest.